Pre-market long ideas, pre-market quality ideas, pre-market trade management ideas. Wow, we have this FCX and we have this Qualcomm. And the reason why we have them, even though that growth is not the same in the world, however, their business models and the type of thing, MMTs, what you're going to enjoy is where both of the names happen to be quite in demand, per se. And what are they in demand for? Well, this one has a demand when things are working well in China. We all know that. Copper and, expansions and things like that makes these stocks go higher. They've been sold down. That's the story here. The story here is Qualcomm's new chips and the things that they do and how they're going to power the internet. They're going to come back with some pretty good contracts moving forward and be part of that smartphone build out. This one here. Qualcomm. So they both have where they have a demand so that we can put that in our worksheets, MMTs. Anyway, this is a pre-market special. The bids down here, you will take a look at that close and you will go into your MMT application and we will come up with opening bids. Right now it's 5:24 a.m. Pacific Standard Time. 11/8/2011. Once again, the special pre-market feature is FCX report. That's what we call it, report. But what is it? Copper and gold. That's what it is. Will the demand come back between today's date and, let's say, they get moving all the way up into February? Would be nice. Gold breaks to 2,000. And this sets up and keeps going in the right direction. There will be breakout points both on Qualcomm and this one. This one, remember, it's out of favor with fund managers. It's when those fund managers return into the name. And when the fund managers return in the name here in Qualcomm. And it is live. It is 5:26 a.m. And it's here. It's now. Qualcomm will be giving bids on that one as well. And not only that, we'll just flip the charts right up here. You can see on the daily, on the Qualcomm chart, right here, standard technical analysis and everything else that goes along with it. Now, the thing about it is that's the public model, so let's be specific about what that meaning means, and that is the public interpretation and the public indicators and the public general thought. The thing that we like is where Qualcomm will actually have a breakout, and it's going to be nice when it clears this area right here. I'm going to draw a trend line, and I'm drawing this trend line live right here, right now. There's 58.10. Okay? And when you get up to 58.10 area and you break above it, you're going to go and break the high at 60 up here. That's going to be that area. And not only that, this is just a public model. We'll use our application, but it's how the longer term patterns in weekly set up. The minute that I had gapped above here, okay, and took out that area right here in the price where this last downtrend was right to there, is that you can clearly see where the gap sequence got above these resistance areas. And now for a period of 3 days, you have not broke this high and closed above it yet. That's this high right here. Today, this is where we would look at, over here in the pricing level, and we'll find out where the limit orders. Now, this is the Qualcomm. Now, Qualcomm, that's this stock right here, Qualcomm in pre-market, 57.30. It had, what, a close of 56.92. So, you got to take the close to the bid and ask. And that is your ratio gap up in price on Qualcomm. Now, on the other hand, this FCX trade. It's been out of favor because people think the Chinese are going to stop growing. That's not the case. The case of it is they like to get their pricing down and then go hoard it and buy it all up and then start expanding again. Look, you have where it was on sale. And when that period of time of everything I was talking about over the summertime and how demand over there was doing what it was doing, where the public thought patterns were and where the public thinking models were working, and how we were working with that short all the way down because it was out of favor. Yeah, they had counter rallies with markets, but still, it really made the bottom down here. And now FCX, that's this one right here, it has that same gap, and it never broke that trend line. Not only that, it had another gap to the real major resistance. That's this whole line right here, going across. That's the resistance. That's this current high right here. So the upside short-term price action resistance is going to be right around 42.90. It's got to close above 42.90, and then it has to consolidate and continue to take the breakouts on heavier volume MMTs. This is a daily chart. Freeport, copper and gold. Look at it. This area right here is where it is, and you're gapping above that right now. The bid and ask is 77/84 in pre-market at 5:30 a.m. Pacific Standard Time. Once again, we just love the idea how we can put it together before the fact, not after the fact. That seems to be a lagging component when it comes to identifying the price action consolidations and breakouts and everything that go in the public model, and you making a market between the public, and that's what the school does, MMTs. So we're here and now, and this is our special feature. And the 200-day moving average MMTs, it right now is at 48.22 on FCX. That's that green line up here. And the 100-day moving average on it, which will be challenges, is 44.20. That's this white line that's still going down. Both are still pointing down. So yes, there are times when it goes up, and if it starts to go into one of these reversals, then you got to buy puts immediately. So yeah, you would have to get on the put side of the trade immediately. You can't let it go unresolved. No. But right now, we're going to be looking at how that breakout will happen, and how it, how these gaps, these small gaps over time here. Let's just blow up this part of the chart. And this is just a public model. We'll show it in the SMF charting platform. And I believe that we will have an SMF new charting engine coming soon. One of the things that we would really stress is where this particular trend line right here, and I'm going to do a horizontal one only for the MMTs. That's going to be this little crown right up here. That's 47.10. That is slightly below the 200-day simple moving average, the green line. That's this number right here, MA200. That's that line there, MMTs. And that's going to be a resistance, but you're going to have to get through the 100-day. That's this one. So, supply, demand, our fund managers wanting to move into good quality names. It is one of the best quality names. And we believe that gold and other things and copper do go higher in 2012. So that's why we're in it way ahead of the time, using these $50 call options up and out of the money. They don't move a lot in beta. No, they don't. You had 98 cents low and $1.12 high. But the last print printed $1.12. That's because this one, dollar price wise, from low to high, has a certain price range, which is ultimately only going to give you so much premium over time. But as it works its way above $2 here, going higher, and you're already wholesale below the market, and as it goes higher, that means that these breakouts at these resistance levels on the chart right here, these resistance levels have to be taken out. So you're going to gap above this one right here. The gap is you take that close to where that bid and ask is, and that's the penny gap that you have. So this one here, it gives a small yield. You have to have a high volume count of shares to make money, and you also have to have a high volume count over here when they're wholesale.